So the expectations were there's going to be financial stress.
Kenya's currency recently hit an all-time low of 160 shillings to the dollar, worsening the economic situation in the heavily indebted country plagued by inflation. The depreciation of the Kenyan shilling has accelerated over the past year, losing almost 24% of its value against the dollar. And according to Sanlam Investments East Africa Limited 2024 Investment Themes and Outlook report, the shilling is likely to weaken further.
We will continue seeing depreciation, but the pressure and the depreciation will be much lower than what we saw in 2023. That is in the year 2024.
Even as Kenya continues to present unique investment opportunities across various sectors, the weakening shilling continues to affect Kenya's economy.
For a lot of lending companies, a lot of fintechs, they do leverage debt funding from global investors, and a lot of this funding is coming in dollars. So if you start to think about repayment of that, then it means there is a new cost. We call it an FX cost, a forex cost, that is being introduced for businesses and companies. So if you just put all of this together, it definitely is a tough operating environment.
Meanwhile, global equity markets performed strongly, with developed equity markets increasing 21.8% in 2023. Emerging markets by 7%. Global GDP growth projections for 2024 is expected to be broadly similar to 2023 at 3%.
Many Kenyans start to look at foreign currency denominated investment options in US dollars, and what they're looking at is return. But also on the domestic front, what we've seen is that domestic investments are starting to look attractive.
At the report release, Dan Gethogo, Sanlam Deputy Chief Investment Officer, noted that interest rates on Kenyan government securities rose sharply in 2023.
The last couple of years, we have raised interest rates. So we've seen a lot of outflow from many developing and emerging economies. The actions are quite critical going forward. And in 2024, the projection is that the US Federal Reserve will start reducing their interest rates. And that is positive for emerging market economies, including ours as a country.
On real estate, the continued weakening shilling and higher interest rates could slow construction activities in the medium term. However, rental assets in defensive sectors such as education and health could still enjoy rental escalation despite inflationary pressures. Linda Koskei, K24 Business.